Let's do it. Let's roll. Awesome. Thank you, Ed. Thank you for joining. Um, do you want to intro? Do you want to give a quick intro to yourself and what you do at Griffin?
Yeah, so I'm Ed. I am a product manager at Griffin. I look after our onboarding, and ongoing financial crime capability. And onboarding covers both direct customer onboarding and also nested customer onboarding. For people who don't know, direct customers, the one we work directly with, and
Yep.
nested customers are their customers. So responsible for both. And I also cover the platform. So I think mostly that's helping people access and use the platforms in a secure manner, and in the ways that they want to.
Amazing. A lot of stuff under your umbrella. Um, you were also, I think you and I joined like a similar time. I think I was marketing hire like number two, and you were one of the first, if not arguably the first, product manager to join. What is it like for a product manager to join a startup so early in its journey? Yeah.
Yeah, I mean it was definitely interesting. Especially because where I'd come from, I was used to working with like very established organizations. But yeah, it was definitely interesting. I think when you're first joining a startup, which is that early, like we were pre-launch of our product, even pre-banking license. So like we literally had nothing, no customers, no nothing. And you're obviously just missing a lot of things that you would in a normal product environment. Like you're missing like user data, you're missing a lot of just data across the business in general. You're missing a lot of process. If you need to do something, like it's like if you're trying to build a house, like we had to at that point build a product, and we didn't even have like the materials to do the building. So it's like you got to make the bricks so you can actually just start building the house, and it's kind of like that. So you have to be really conscious of the fact that you're starting from just essentially nothing. But yeah, I mean it's been an awesome ride so far, and I think we've both seen like some really big ups and downs, and that's kind of what you sign up for, and that's a part of the fun.
Yeah, for sure, for sure. Definitely get you on the everything has to kind of start from scratch, like the house analogy. What advice would you give to like a first product manager joining a startup at a similar phase? Like if there were, certain things that you picked up along the way, or some things that you wish you did, like if you could do it again, maybe you will do it again at some point.
I think that the main thing is just be prepared to get involved in almost any type of conversation, even if you think that's within your wheelhouse or not. Because startups by nature are, especially the phase that we're at, they're reliant on outside investment to keep going. So I know every company says like we do a lot with very little, but the startup like phase, you have to do a huge amount with very, very little because you're trying to prove the business model with the least amount of capital investment. And to make that possible, you just have to be willing to get your hands dirty. So I think for product managers who are coming from more established environments or ones who are jumping into the product manager role for the first time and thinking about joining a startup, it's, don't think that the role is specific just to product. It is specific to everything. And product by nature hits every single part of the business anyway. So it kind of just multiplies that that requirement quite heavily. So yeah.
That's really good advice. Um, the big thing that we worked on this together at the time that we focused on initially was like Griffin's compliance offering,
Mhm.
and part of it, what we now call is the verified product. Um, do you want to give people like a quick overview of like what does Griffin do in the compliance space? Why do we do it? Like, why is it important, or why do we think it's important? Yeah.
Yeah, it's definitely not like the thing which is front of mind of people when they think about a bank, especially like providing embedded banking services. But one of the key insights that David and Alan kind of experienced as well as also like understood about the market is just the cost of entry to market is high, and the time to entry into market is relatively long. And one of the main reasons for that, like a huge contributing factor, is making sure that you're compliant. So that's making sure, I mean, in my space, like onboarding and financial crime, that's making sure that you've got the correct controls in place to mitigate the financial crime risks that you are exposed to based on the products that you're serving, or the type of customers that you're going after, retail, business, industry sector, whatever. And the reason for that is because in order to get into market, you need people to interpret the regulations, so you know kind of what you need to have in place. Then you need to understand the controls that you need to have. You need to have people in place to operate the operations around those controls. You have people to performance manage those controls on an ongoing basis. You have to horizon scan to know the trends that could potentially impact you in the near future that you have to be ready for when they hit. And then there's the software build on top of it. So you need to build you need to build software, you need to build toolings, you need to integrate with like specialist services, like you need access to like sanctions data. Those things renew on an ongoing basis. Like there's and then you need to build things like scoring mechanisms to make sure that you're risk assessing people appropriately. Um, and that's just a setup. Last year we had a good example of this when APP push payment fraud reimbursement scheme came in. There were changes that we had to make, and I think like when you're a new company or a new fintech and you're trying to get into market, like trying to get the people, the tooling, like the contracts all in place to manage that is just enormous. And normally when a fintech is coming into the market, they're trying to solve a specific, like no one's coming into the market and saying like, oh, we're going to be Barclays because Barclays have like solved that problem. They're normally coming in to say, oh, there's a niche opportunity in payroll services which like could be exposed, and if it goes well and we expose it, like we can roll out into like a broader set of problems. But they're trying to solve a specific problem, and like paying to like build all those teams and software is just massive. And so I think with Verify, what we're allowing people to do, and kind of our compliance as a service, if you will, is to make sure that new entrants or people who are trying to validate like a major pivot in their organization with a financial problem that they're trying to solve, can just do so really, really quickly. And they don't have to worry about the ongoing risk that they're exposed to. That's on us. They're using our tooling, they're using our people, and all they have to do is kind of integrate with our API and kind of get going. And on an ongoing basis, we're the ones who are performance monitoring, we're the ones who are horizon scanning. We have a very close relationship with our customers on an ongoing basis to make sure they know what we're doing and what changes might happen and how that might impact them, but they don't have to do the worrying about that. So I think it's a massive value add. It's the thing that people don't necessarily think about that much, but it's the thing that people end up spending so much time on. And for new entrants, it's a pretty big headache to have to take on. Once you're
Yeah.
further down the line and more established, and fine, you might want to improve like economies of unit economics and stuff and maybe build your own, but as you're coming into the market, it's just so prohibitive, it could almost kill your business plan just on day one.
Mm. Mm. So how, I mean, this is super interesting because, again, being very honest, like before I joined Griffin, I didn't think about this stuff. Like I didn't have a financial services background, and the way you just described it, like really hits with me because it is so broad and there are so many like elements to it, not just technology, but also people.
Mm.
And it is like constant. So if I am a new fintech startup, like what what do the choices kind of look like for me? Like, say, Griffin's Verify and Managed Compliance Service versus, say, going out and doing it on my own. Like, what are the kind of key trade-offs I have to make here?
Um, well, I think, like I said earlier, there's the key trade-offs are basically time and cost, and they're pretty closely related. So I guess the key trade-off is you can go off and build your own solution, or you can do the work and integrate with a number of different providers or one or an aggregator and pay for that. Um, or you can take our solution, which is kind of like off the shelf. And I guess what's unique, so people aren't coming to us just for the compliance as a service or verify. People are coming to us to access products like embedded bank accounts, savings accounts. Like what they want is access to the products, not necessarily the access to compliance as a service. It's just a great mechanism for accelerating your time to market. So I guess like the main trade-off that they're thinking about is whether they go into market, try and find a solution, and then work with us differently, or if they don't want to spend that time, they can just work with us through our verify model, and then they get that comfort that the people who are coming into the platform, who are their customers, are ones that we deem are like within risk appetite for the products and the that they're trying to sell.
So that's interesting. So we also, so the way that the checks that we run with this service and the way we run them and the way we decision things, that's all aligned with Griffin's risk appetite. Is that,
Yeah, and
yeah?
I guess that's
Yeah.
like a big like that's a good point that in your question, which is a big risk that you have in market that you can go off and do all this yourselves, but you know
Mhm.
there are many horror stories in the industry of people who have gone off and done it themselves, and then they've been audited by their banking provider, and they've realised that their activity hasn't kept them within risk appetite, and then they're basically given like termination of service notices by their banking provider unless they do X, Y, and Z within a certain time frame. And you can get people who have been debanked. And I guess with us, when you take a managed solution from us, like through Verify, and our ongoing controls, like we're the ones who are responsible for those controls. So if we suddenly start accepting onboarding applications for people who are like high risk, politically exposed persons, that's us who have made that mistake. Like we need to rectify that. That's not the customer's fault. So I think there's like there are trade-offs, but I think one of the major ones is peace of mind. Look, if a customer signs up with us and they send us basically just a bucket load of like high risk peps or sanctioned individuals, you know, we're not gonna let them in, obviously. But I guess like on an ongoing basis, the risk of you being debanked by your banking partner significantly goes down when your banking partner is the person who is actually responsible for managing the risk that they hold by being in market.
Yeah. It's super interesting. I mean, how, yeah, like the distribution of risk and like who's taking it and how you're mitigating for it is there's so many factors to it, which I've every day at Griffin I appreciate more and more. So many complexities which you work through and actually solve for.
Yeah,
Yeah.
and also I think like one of the really great things about working in a SaaS model, and being a platform, is that you can't think of all the edge cases and all the use cases for your solution. Like that's literally what we're here to do. Like we provide, you know, the foundation, and then people go solve unique problems in market. Um, and it does keep you on your toes because there are just so many use cases that come out of the woodwork that you just never thought about. And your customers are always, you know, the people that we work with, our customers, they are creative. The people, you know, they're in market to solve very specific problems. And so the use cases do get quite niche, and you have to really think about, okay, like, is this different to what we have now? Like, do we need new controls? Like, are we okay with this? Is this within appetite? So you're constantly kind of testing your risk appetite and reassessing it on an ongoing basis based on what your customers want to do, which makes it fun. Yeah.
Are you then? I mean, that's mega interesting because especially with like the number of the sectors and like you say, the number of different problems that our customers solve. Like, do you then try and find like a common thread between these things to almost like productize it or kind of make it as generally like applicable as possible?
Yeah, I mean, you have to, otherwise
Right.
your operating costs would just become completely ridiculous. Like we work in like so many different industry verticals. Like you wouldn't want to have an operations team and a set of financial crime controls, which are like completely unique to that. I think the model that we have is that let's say like we have a base set of controls, let's call it 70. And then if we're gonna like try and help solve a problem in the construction space, like funding construction projects, or in the prop tech space, we might add on like 30 more like activities or controls on top of that 70%. So you're not like managing 100% of a new thing in each industry vertical. And I guess also like from the product management point of view, that is also interesting because you have to, I think product management is basically you have to work out what to say no to because you can only say yes to really one thing at a time. And our customers obviously want as much help as possible solving their specific problem as far as you can. And so I guess with that attitude, you also have to be cognizant of what problem should you be solving and what problem should your customers be solving. And so, yeah, you have to basically then take we'll take a 70 or 80% base model that applies to everyone, and then we'll target specific things which are relevant to that. So I guess like in the prop tech space, money laundering is like a really big challenge that they have. And yeah, so we've got like additional money laundering controls at the point of onboarding that we don't have maybe in other sectors that we're working in.
It's well, so much, and we haven't even spoken about the other side of the compliance stack, which is what we call the reliance model. Do you want to maybe give an overview of what that is and how we
Yeah, I
work
mean,
with customers on that basis?
I think there's a bit of a funny story in this though, which is that when I joined when I joined Griffin, it was very much supplying banking services, being a BaaS provider, which also has a banking license, and doing compliance as a service as a core offering. And then I think in 2010, early 2022 is when I joined, and then we got to late 2022, and the economy was obviously not doing very well, and we found ourselves like thinking about how we can majorly pivot, not disregard what the like the vision and the mission of Griffin is, but definitely work out like if there were ways that we could get into market quicker and scale quicker. And so yeah, we started working off this notion of reliance, which is like a well established, which is essentially means that we allow customers to continuously like ongoing use the controls and the systems that they have in place, but then they give us a subset of data on an ongoing basis, and we have like rights to audit their controls on an ongoing basis. So I guess what's important there is like if you're a more established, if you're a new entrant, all those problems of time costs that we talked about earlier are true. And we have a solution for you. But if you're a very established player in the market, you've been around for 15 years, and you're just looking at us to like be a new safeguarding provider, then you're probably not going to want to tear down all the teams and all the like the build that you've got in your own business, just so you can work with us. So yeah, the reliance model is actually really good for more established people or businesses where they can continue operating as they do. They just send us a small subset of information, and we review that on an ongoing basis. And yeah, I think it works really well. I think we started using Verify and our compliance as a service model, and that's like where 100% of the customer base was. But I think Reliance now is the vast majority of our customers. So yeah.
Yeah, and that's available to regulated companies only, if I'm not mistaken. Yep.
Yeah.
Yeah.
It's basically the reliance model is that we can rely on you because
Right.
you are a regulated entity, and therefore we know that your controls are of a certain standard to be compliant. And yeah, so like I said, I think we do it a little bit differently than a lot of banks. So I think
Mm.
most banks will essentially get you to do like quarterly or a sort of annual audits of your controls. We do it slightly differently. Like we want to have an API integration where there's a little bit more setup cost, but we're sharing information on an ongoing basis, like as the customers are coming into our system, and then we're doing ongoing reviews of that information as it comes to us. And I think we've got like a fairly ambitious roadmap for how we can essentially mitigate this need to do these huge annual audits, which are pretty like labor intensive, and they take quite a long time, and move to kind of more of an ongoing model where we're sharing information on an ongoing basis, and we've got really good oversight of breaches or control failures on an ongoing basis, yeah, to manage that risk together ongoing.
Oh, that's good, and it kind of gives it doesn't turn the like annual audit into like a huge event. It would make it more of, that's the hope, right? Or
Yeah,
yeah,
definitely. I
yeah,
mean, look,
yeah,
some look fair. It's very fair that some businesses are
yeah.
very protective on their data, and we definitely respect that. So we can work with companies in a multitude of different ways. But I think the ideal state for us is to be sharing, like information on a company's financial crime control performance on an ongoing basis, which then we can set alerts around. So instead of doing like dip testing once a year and going through a massive audit, it's like, hey, we've noticed in the last 2 months, like this looks like there's a breach, or we're nearly at close to a breach of a threshold. Can we like do something about this one specific thing instead of getting to the end of a year and being like, okay, so after the last 12 months, there's been like X here, like Y here. This is a big problem. Like you've got X amount of time to sort it out. Otherwise, it's over. I think we just really want to avoid that type of relationship, and it's not really within the ethos of Griffin. Like we're a highly transparent and collaborative organization. Like we're talking to our customers pretty much every day, either on the phone or through Slack and stuff. And um, it just feels a bit weird to like do these like big audits once a year, which seem very very serious and like hugely consequential. Where really it should just be an ongoing iterative process where we're just sharing information back and forth and keeping each other comfortable on an ongoing basis.
Well, that makes a lot of sense. You don't want surprises and like
No one likes
spikes in
surprises.
effort.
Yeah.
Yeah. And have you ever worked in banking or financial crime prevention before this role?
Not financial crime prevention, no.
Okay.
So I
Yeah.
guess kind of like you, this was the first time I was working in like especially on in a product company itself, which had that kind of focus. But previous to this, I was working in Australia, and the last role I had was at a product consultancy and like strategic design agency who specialized in financial services. And I guess it's actually a good like rounding for why I joined Griffin, which is the company I was working with was essentially trying to solve like problems for you know banking and insurance services. They do a lot more than that, but that was kind of my focus. And I guess what became really obvious is that finance and health are pretty much the two things that even if you ignore and like have no active engagement in, they will have a massive impact on your life. You can ignore your health, but at some point it will have a big impact on your life. You can ignore your finances, but it plays a massive role in what you can do. And so it kind of led to this ongoing question of like, well, how do we make people engaged in their finances so they can make decisions which help them achieve the lifestyle that they want? And there's a really interesting piece of work actually by the King's Fund in like back in 2004, which talked about how people manage chronic disease. And I think it's pretty applicable to financial services, which is that people need knowledge, skills, and confidence to manage chronic disease. And I think they need knowledge, skills, and confidence to manage their finances. And I guess like one of the other key dimensions to that is that finance has to be relevant and contextual for people to kind of engage with it because it is complex. It is hard to know kind of like, oh, this decision today could have a massive impact on me in 5 years' time. And so that was kind of my interest in financial services. And then when I moved back to the UK and I was looking for a new job and I wanted to be product side, I got interested in Griffin and kind of ended up in the hiring process for it. And I guess I just found it super interesting that here was a company that were essentially banking everything on the fact that making finance more contextual is like one of the big industry shifts that we're going to have. And I think there's like Mark Andreessen, he says something like every company in the future will be a finance company or whatever. And so I think that was one of the main attractions for me to join Griffin because I was like, oh wow, like I can be a part of a company that's building like the platform, which will then help all these other financial services companies trying to solve like really, really niche issues. Um, so yeah, I mean that's my background and kind of that's why Griffin was so attractive because it kind of presented the opportunity to really scale that desire for helping people understand their finances or help people
Yeah.
kind of achieve the financial goals that they have, whether that's business or individual.
Yeah. No, I get you. I mean, it's a big reason I think why I joined, and like that contextual piece, and actually seeing our customers now, like now that we're live and seeing our customers like use the building blocks that we give them to do incredible things and change their sector of the market. I feel like that's so rewarding. And it's like the beginning of the vision like coming to life, and it kind of changes a lot of things at once. Yeah.
Yeah, I
Uh,
mean, I think Habu are actually like a really good example of this. And everyone's been thinking about how to make lending easier, from the point of view of like getting money into your account, but like very few people have thought about the repayment experience, and it kind of reminded me how in insurance, like everyone thinks about like taking the policy out, but the claims experience just across the board just as poor. No one's really trying to solve that problem because it's the part of the business that isn't actually that attractive to the company to solve. And I think Habu are kind of doing that kind of thing. Like they're not thinking about like how we can get people loans. They're thinking about like they are thinking about that, but obviously they're thinking really cleverly about how we can make the repayment experience much better. Because like I personally think I've taken out loans in the past before. Like once you finally get rid of the loan, it's like the best feeling ever. And like we should be encouraging people to leverage financial products to do the things that they want to do. And yeah, I mean that it's a really rewarding part of working in Griffin, seeing problems like that being solved in market.
yeah, no, I'm definitely with you. How did you learn the financial crime expertise? How did you gain that expertise?
I think I was pretty lucky actually from joining so early that we had some really great people in our risk team who gave a lot of education out internally. Like as you know, because of Slack and we 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 don't really like private DM groups in Griffin. Like we're very transparent. Everything's out in group conversations. So the opportunity to learn is just massive. Um, but I think, yeah, outside of just getting one-to-one ongoing conversations with our MLRO and deputy MLRO and head of FinCrime Ops, I think the main thing is that you got to like be proactive and looking at the regulation and looking at the guidelines and like testing kind of your interpretation on those things. Like I think it's uh, you, if you get spoon-fed stuff, it's it's fine. Like some people can learn like that. I personally can't. Like I have to look at something, make a suggestion, be laughed at in public, to know that that suggestion was awful, and then learn kind of what the right interpretation of that is for us. So yeah, I think it's a mixture of proactive and also just engaging with the right people. And yeah, like I said, I think I was lucky for when I joined because now you kind of need better separation between first line and second line. Where before we were live, and we weren't distributing product and stuff. There was a lot more fluidity between like conversations around going like, is this acceptable? Is this not acceptable? So yeah.
Yeah,
But I think
I
it's
do
also
remember.
just an
So,
ongoing
yeah,
thing, right? That's one of the
yeah,
really, I mean, that's one of the hard parts, but also the fun parts is that regulation can change, your risk appetite can change,
yeah.
um, and consumer behavior, things like fraud, like the way people commit fraud, change all the time as well. So yeah, I think there are obviously experts, but I don't think I would ever say that I'm an expert in this field because I think it would almost be impossible to be one because things change so quickly.
Oh, it's no, it's I think it's very impressive how in the detail you are with this stuff without having like a formal or kind of formal like experience or background in it. Yeah, obviously, you have worked in financial services before, but yeah,
Yeah,
no, it's
but
very very cool.
But I also think that's also credit to just generally the whole Griffin organization, which is like when you have the right governance in place, like you can have people join the company and upscale. I'm not talking about me specifically, but I just think across the board, like once you have the right people in place and the right governance structures in place, it really creates the opportunity for people to apply a growth led mindset and a kind of like become expertise in their domain.
I think I've benefited from that hugely. Yeah, like I had no idea what how fintechs were regulated 3 years ago. It's a core part of how we do segmentation and other things on the marketing and like go to market side. Um, yeah, what's been a highlight for you, Ed? Would you say over the last few years?
Um, I mean, there's been a few, but I think it's pretty hard to get away from actually launching the bank and being ready to launch the bank. And I think there was the paperwork aspect which I was just like wasn't involved in, and the RBP, which had to get written, sounded painful. Um, but once I think just that first time when we got money coming into an account, like a customer was accepted, a bank account was opened, and like customer funds were in the bank for the first time, that was just like a huge moment. I remember the vibe on the day, like watching everyone react in Slack to like being granted the license and then the money coming into the account. I mean, that was pretty special. And I think a lot of people just really don't experience, like how many people who work at established banks get to see the first pound go into the account. That was pretty special. And it also was the culmination of close to, I think I joined in May 2022. Bank launch was February 2024, I think. Yeah. And so yeah, the culmination of nearly 18 months work, in one moment was pretty special. And then, I mean, like it sounds pretty cliche, but every single month at the moment is a highlight. The operations team are constantly kind of communicating the growth that we're getting internally, and that's just super exciting. It definitely comes with its problems, and like scale up phase has its challenges, but they're welcome challenges. These are problems that we want to run at. Someone goes, "Oh, we've got a customer that might bring on X 100,000 underlying customers in 2 months' time." Yes, that can sometimes be challenging, but that kind of challenge is the kind of one that we want to run at. Like that is an awesome problem to have. And so in that sense, ongoing, there's yeah, every month is like a pretty big highlight, just seeing the growth of the business.
Yeah, for sure. And are you excited about anything in particular over the next 6 months? Yeah.
I think it's mostly just seeing the continued growth, that we'll get. I think what will be really, really exciting is when we do the other part of the bank, which everyone knows about, which we're not doing now, which is once we get into the lending space. I think that will be like a monumental moment in the business. We're taking deposits, we earn interest on those deposits, like we're earning interest from users, like making payments, like depositing funds, onboarding customers. Um, but and like treasury management, brings in its own revenue. So it's really exciting, the revenue streams that we have now, considering where we were like a year ago and what volumes we're doing. But I think once we start doing lending, like that is like the other side of banking, like holding money and then lending money. And I think when we get to do that, that's going to be really, really exciting, and will kind of round the bank in some ways. Yeah, I mean there will be a lot of work to do to get that live, obviously. But I
More
think that
welcome
I think that'll
work.
be super exciting. It's not in the near future, as far as I understand, but it's obviously coming up. Like that's one of the main reasons you're in market as a bank.
Yeah. Yeah, I would also say I'm very excited for your improved business banking go live onboarding process, which is now on our
Yeah,
public roadmap.
nice plug. I think that's also that's one of the things that I think really stands out, about Griffin is,
Mm.
you see transparency plastered on a lot of company culture pages. And sure, they might be transparent internally, but some of the things that we have done prove that we are like actively engaging in being transparent with our customers and the market. Like public pricing, to your credit, I'm getting that. That is really hard to do. Internally agreeing what pricing we're going to put on our website, which is applicable to everyone, which can be scrutinized, seen by our competitors. Like that is a really, really hard thing to do. I don't think people understand how hard it is to get the necessary alignment and comfort internally to put that public. Like our public roadmap and our public sandbox, like those are all indicators of transparency. And I think one of the things that we're doing right now, as you mentioned, is we're looking at ways that we can make the entire direct customer onboarding journey self-service. And I think that's like phenomenal. Like not putting stuff behind paywalls or sales conversations, just allowing people to come, look at the price point, look at the sandbox, see what the integration looks like, see what the technical capability of the platform looks like, see what's coming up next, what's relevant to me. Like, is this something? Does this roadmap align to the problems that I'm trying to solve? And then if I like it, I can just apply, be accepted, and open up a bank account. I like that type of transparency, self-service in the banking partner acquisition process. I think is phenomenal. So yeah, that is an exciting part that's coming up, and I think, but more importantly, I think it signifies the effort that we're going to be
Yeah.
as transparent as possible and just not throw our solution at people. I think what we're trying to do is make people highly aware of what we can do, what problems we can solve for them, um, and just let them make up their own mind. And I think
Mm.
that's really, like, no one likes sales pressure.
Yeah.
And
Yeah.
we're
Yeah.
trying to set a new standard in an industry, which means that we are like advocating for that not to be the case.
Yeah, it's show don't tell. Like, and if people want it, great, and it forces us to improve our product and the way we work. It's
Yeah, and
I
also, like,
yeah.
if you put your pricing live and no one's converting, and you find out because your price is too high, then like you get that market feedback pretty quickly.
Yeah,
As far
that's
as I'm
true.
aware, I mean, you might know we didn't put our pricing live, and everyone was like not working with Griffin because that was way too expensive. So yeah, I think, yeah, good job on that.
Thank you, thank you. Still working on it.
Yeah,
Yeah, no, but it's fun. It's one of the things I love about Griffin. And it's I'm really lucky to work with you day to day. Thank you so much for joining us and giving us like a proper insight into your very big umbrella of and particularly compliance. I think it's really exciting. And we'll hopefully see you again soon.
yeah. Thanks, Mo. It was nice to chat.